Good morning, everyone. Thank you once again for joining this webinar for the second day. Thank you once again for joining the second day of the e-conference on storage solution. I'm going to, first of all, introduce today's session. Just allow me to share my screen. Give me 1 more minute. I'm going to share my screen. Okay, so I hope everyone can see my screen. I will start by thanking our sponsor, Huawei, Jesola, Jinko, and Sensing for sponsoring this event, and also thank everybody for joining us. I would like also to remind some housekeeping rule. Remember that the recording will be shared with you after the presentation. And also, we highly advise you to use the chats for networking and the Q&A for questions. I will dive deep to the main points of the discussion. Yesterday, we had a very amazing discussion focused on Technology Day, and today it will be a pure combination of projects and financing. And also to just let you know about what is happening tomorrow, we'll have a deep dive where we will have different stakeholders that will be addressing different topics, such as a dialogue between OEM, CNI off-taker, and mining industry. And we'll also have another dialogue between developer, OEM, and grid operator. And on Friday, we have our last discussion that will be more about the Africa storage market outlook. I just wanted to give you an idea of different topics that will be addressed until the last day of this webinar. And I'm very pleased to announce our first speaker of the day, who is called Zoe Pierre. Zoe is the investment principal. It's the African infrastructure management. She'll be presenting about what makes utility scale solar plus storage projects bankable in Africa. Zoe, I'm going to hand over to you the presentation. Thank you.
Hi, Salim. Can you hear me?
I can perfectly hear you.
Can you see me? I seem to be having some technical difficulties. So just checking, can you see me as well? Oh, now I've lost you, so I no longer hear you. I think it's because you're muted, so I'm hoping that
we can perfectly hear you as well.
Okay, fantastic.
Hear you and see you as well.
Great. Now if I just share my screen, how do I, it says that you need to grant me permission. I can't share the presentation.
All right, let me grant you that permission. Can you request me to grant you that permission?
Oh, I only see host disable attendee sharing. That's all I see.
Okay,
If not,
so let me. Okay, perfect. Can you now share?
Okay. Yes, I think that works. And you can
all
let me
right.
present. Okay, is that okay?
It's perfect.
Great. Okay, cool. Thanks everyone for taking the time and for bearing with us in this slight technical difficulties. And thanks to AFSIA for having me. I'm Zoe Pierre, an investment principal at the African Transition Acceleration Fund, or ATAF, with an AIM. I started my career in energy as a geophysicist before moving into trading and infrastructure investing at Macquarie prior to joining ATAF at launch. So my perspective today comes from having worked across energy markets technically, commercially, and as a long-term investor. Today, I'd like to focus not just on building more renewable energy in Africa, but on how we build projects that are genuinely bankable and scalable over the long term. Increasingly, we believe storage sits at the center of that conversation. Oh, there was a slide for myself and I forgot to change. There we go. So today I'll structure today's discussion around 4 areas. First, who AIM and ATAF are and why we believe there is a major capital gap in early stage transition infrastructure. Secondly, why the case for BESS is strengthening rapidly. Then, what actually makes solar and storage projects bankable in Africa. And I'll flag now that I do use solar and renewable energy interchangeably in the presentation. And finally, where we think the market is heading from here. So AIM has been investing in African infrastructure for more than 25 years. Across the platform, we've managed roughly 4 billion of infrastructure assets and completed more than 80 investments across the continent. Importantly, we're not new to energy transition investing. ATAF builds on that execution capability, but moves earlier in the value chain, taking measured development and structuring risk, where we believe strong platforms can ultimately scale. So why ATAF exists? One of the biggest lessons we learned as infrastructure investors was that Africa does not fundamentally have a demand problem for electricity. The continent has enormous unmet power demand. The challenge is that too many potentially good projects fail before they ever reach financial close. Often that failure happens because projects run out of development capital before the structuring, or because the structuring is weak, or because the offtake is not sufficiently credible, or because developers underestimate the complexity and capital needs for moving from a single project into a scalable operating platform. So ATAF was specifically designed or conceptualized to address that gap. It's the missing middle of this market. When we say early stage investing, we don't mean venture capital or concept stage technology investing. We mean projects that are already beyond ideation, where the resource is proven, the market exists, and the need is real, but where projects still require substantial development capital, structuring support, and execution capability before they become financeable at scale. This is the gap ATAF was designed to solve. ATAF is structured as a blended finance vehicle targeting 250 million USD. The first loss capital in the structure helps absorb early stage risk, in that it's first loss by design, and unlocks private capital participation alongside it. Our mandate sits at the intersection of 3 things: accelerating investment into the energy transition, delivering measurable climate impact, and importantly, generating risk-adjusted commercial returns. ATAF will invest across 3 major verticals. First, clean electrons, which you all know, renewable generation, storage, energy handling, broader power infrastructure. The second is clean molecules, including biofuels, and theoretically green hydrogen, although I say that with a major caveat that we haven't found a way to make that commercially relevant yet. And the third is sustainable transport, particularly commercial fleet electrification and charging infrastructure. Today, I'll focus on that first part, clean electrons and storage. So let's talk about the case for BESS. Africa's solar fundamentals are exceptional. Some of the best irradiation globally, rapidly growing power demand, and increasingly cost-competitive generation. But this slide shows why standalone BESS is becoming harder to finance as penetration rises. If you look at the anonymized chart on the right, the x-axis is time and the y-axis shows captured electricity prices. The blue line represents that broader baseload pricing, while the gold line shows solar PV captured prices. If you look at the start of the trend, the prices are quite close. But as more solar enters the system, the capture prices diverge materially. And why is that? That's because everyone generates at the same time for solar during the daylight hours, creating oversupply and lower realized prices. Solar effectively starts cannibalizing its own economics. Meanwhile, the grid continues to value power most during the evening peak when solar is unavailable. That's the pinch point in the chart, which is highlighted in those earlier years, where merchant solar economics begin weakening materially. That is where BESS starts to become really critical. Storage allows developers to shift low-value midday energy into higher-value evening periods, improving capture prices and reducing curtailment risk. But financing BESS is not just about falling battery prices. Or rather, I should say a significant part of why this works is because BESS prices have fallen materially, but that's not all that there is. Investors are also underwriting degradation curves, augmentation strategies, dispatch assumptions, warranty structures, and whether the market is sophisticated enough to monetize storage properly. The same battery project could have completely different economics depending on the wheeling rules of where it operates, the ancillary services market, and the quality of local operations. So let's look at how BESS creates value. The chart further shows how BESS allows developers to effectively shift that low-value midday solar generation into higher-value evening periods. So instead of selling electricity into an oversupplied midday market, you could store that electricity and discharge it later when prices are materially higher. This is what we mean by energy arbitrage. If you look at markets like South Africa, the evening peak pricing differential versus midday pricing can be significant. And importantly, the value stack for storage doesn't stop there. Storage could also provide ancillary services. What do I mean by that? It means that the batteries could stabilize the grid by responding very quickly to frequency deviations or short-term imbalances. Utilities and system operators will increasingly pay for that capability because it improves grid reliability. It's effectively a cheaper alternative than having to build or augment the grid. And then you have capacity-style revenues, where in simple terms, some markets are willing to pay not just for the energy delivered, but for having dependable capacity available when needed. So as Africa's energy markets mature, we expect projects will combine multiple revenue streams simultaneously. And the question then as to why now is because BESS economics have changed. Historically, storage was simply not commercially viable. Battery costs were too high, and there were too few ways to monetize flexibility. But the economics have changed, with battery price packs having fallen by more than 80% over the last decade. And I'm sure that's a theme you'll hear repeated throughout this conference. At the same time, renewable penetration is increasing across many markets, which is increasing the value of flexibility because grids are themselves becoming more and more stressed. And then finally, and importantly, this is happening as African electricity markets are gradually liberalizing. So the story isn't just that batteries are cheaper, it's that the entire market structure around the flexibility is becoming more commercial. Now, with all that in mind, you're asking yourself, so why do projects fail? This sounds like a no-brainer. Why aren't we just seeing more things coming to financial close? One of the key messages I want to leave you with is that most renewable projects don't fail because of technology. And the technology works. Solar works, batteries work. The projects fail because of structuring. They fail because the offtake is weak, because grid access is uncertain, because development capital is insufficient, because the sponsor underestimates transmission risk, or because the risk allocation between parties is fundamentally unbankable. And by unbankable, I really mean that banks won't lend to it for equity to take on that role of to take on a minority role, as is typical of project finance structures. Lenders and investors need confidence around long-term cash flow durability. And yes, there are exceptions to this. I'll mention one later on, but generally, this visibility on cash flow really is central to the infrastructure thesis. And that means that you need credible counterparties, clear dispatch frameworks, robust EPC structures, bankable O&M contracts, credible resource studies, and experienced management teams. And just underscoring again, the bottleneck here isn't technology, it's execution and structuring. So what is ATAF looking for within all of that? ATAF is, what we look for really echoes a lot of what other infrastructure investors are seeking, but with some nuance. And the two themes I'd like to pick out really is, first, we're not looking to fund isolated one-off projects with no route to scale. We want to support management teams in building scalable platforms. Often that would mean that we start with an anchor project, partly because it allows us to control overhead spend and prove execution capability. But there must already be a credible pathway towards broader market expansion. We want to see additional pipeline, repeatability, market depth, and evidence that the grid and demand profile can absorb future scale. Second, management quality is absolutely critical. And I'm smiling because I have in my mind some really great management teams that we're working with. We believe in African infrastructure, strong management teams could be maybe the single biggest differentiator between success and failure. We spend an enormous amount of time evaluating whether the teams can manage stakeholders, navigate regulators, raise capital, execute construction, operate the assets, and scale responsibly. And that scaling responsibility part is important, particularly to ATAF, because we're taking both that development risk before we deploy into CapEx. The combination of credible management plus ATAF capital plus AIMS development and structuring experience is where we believe the real value creation opportunity sits. And importantly, we're increasingly focused on platforms that combine solar, storage, flexible dispatch, and sophisticated market participation. Because increasingly, that's where we think long-term value creation is going. So if I look ahead, and I had to leave you maybe with one thought, I'd offer this. The winners of Africa's energy transition won't just generate renewable power, they'll deliver it when the system needs it most. Africa has incredible renewable resources. Increasingly, though, the challenge is flexibility and bankability. That's why storage is likely to scale fastest in markets where regulation is evolving alongside renewable growth. South Africa is an obvious example here, where groups like BB Energy and Solar Century Africa are already helping commercialize this time of use opportunity through private wheeling and flexible power delivery. Namibia is another interesting market with the modified single buyer framework, where that's opening up to bilateral trading and SAP exports. Now, ATAF itself does not currently have appetite for pure merchant risk, but we do see battery co-location alongside contracted offtake as a very attractive middle ground, allowing projects to improve pricing, shift power into high-value periods, while still maintaining that strong cash flow visibility, which is central to the risk appetite that our LPs fundamentally want to take. So the key assumption, the question rather, for investors is no longer simply who can build renewable energy, it's who can deliver flexible, financeable power into increasingly dynamic electricity markets. I've gone through that very quickly, but hopefully that leaves enough time for questions. Thank you for your time. And I hope you have, I'll take your questions now.
Perfect. Zoe, now it's time to take questions. Luckily, I think we have enough time since you've just managed to have a presentation very short. So going to the question, I will take the first question from Claude. Claude was asking, as you mentioned in your presentation, that the constraints is early stage capital, not demand. So there is a demand. So Claude wants to understand, why do you think so many energy transition projects in Africa struggle to reach financial close despite the strong market demand?
Thanks, Claude. And is that Claude a person or Claude AI? But no, I think thanks for your question, Claude. I think, and I tried to touch on it briefly in the presentation, really it comes down to aligning needs across the stakeholder set, right? So the macro need is that there's a need for power. We understand that. The developer wants to usually do something good, also wants to be able to be paid for it. And then the larger infrastructure house wants to be able to get a deal that it can, that matches the risk appetite of its underlying LPs. All that is a way to say that there's often a mismatch between what the developers believe is a bankable project versus what the financiers do. And that's why I could come back to some of what, I don't know if my screen is still sharing, it probably isn't. But if you go back to some of those, what are we looking for? The long-term cash flow visibility, strong O&M partners, strong EPC offers. And that's not just on price, that is also on how the warranties de-risk the operation of the plant away from the developer and the ultimate sponsor towards the EPC provider. So all of these pillars have to come together and be agreed by those parties to get it out of that development phase into financial close. And I think there's often a mismatch there. And maybe that's a little bit of just where the market is in terms of, relative immaturity versus the more developed worlds. I think there also is sometimes a disproportionate perception of heightened risk in the continent. So you don't have as many players having the conversation. And so by virtue of that, you have less business being funded. But ATAF really is positioned to fix that. And so I don't think we would struggle for inbound pipeline because, to your point, there are so many that are not being funded. It would be choosing the appropriate projects that we are able to close that gap in expectations as quickly as possible for an efficient financial close.
Perfect. The second question is about bankability from Patrick. Patrick just asking, most projects fail long before construction starts. In your experience, what are the most common factors preventing renewable energy projects from becoming bankable?
Okay. Again, very, very much a similar theme. I think, well, firstly, let's step back. A developer comes in, he has a couple, let's say he has $1 million that he's put into a project and then he wants to unsell. Oftentimes you see people wanting to get projects to, they have an MOU off taker and the expectation that they could realize value from selling of that. That's not necessarily how the market works. So I think what needs to happen from a developer, what would help make my job easier is if the developers themselves were from day one very careful in their spend, such that their net negative is not so high that it has precluded me from investing for them to recoup what they've already spent into the project. That's one thing. So it's just that kind of discipline around spend, evidenced in the way that a project has been developed. That's one part. Secondly, for institutional capital as ATAF and AIM, it has to be a platform strategy because, as I said, we can invest up to 40 million, which means it's not really worth the time or the cost of the team that we have to fund to do a $1 million, $2 million, $3 million project. So you're coming with a very clear path as to how you can scale that base into a $40 million ticket. On top of that, I think there's often an underestimation of how much time it takes to get a concept, an MOU into a structured PPA, into a structured lending agreement, into a fully vetted EPC agreement with warranties, etc., built in. And so a lot of that is actually just coming from developer experience. And I could say to you in a 20-minute presentation what the features are, but that doesn't make me an expert. It certainly won't make you an expert. So just the tried and tested road is really when you see that success starting to multiply across developers. It's very unlikely that your first one is going to be the win. And so we just really need a bigger ecosystem so that by the time that funnels down or up, whichever way you look at it, you have a higher amount of successes, even if the rate of success may be comparable to developed markets.
All right. Last question before we close your session. It did not mention his name, but I think it's worth taking this question. What is your analysis regarding energy growth in Angola?
Thank you, he who must not be named. I can't say that I have a very deep perspective on that. So I'm going to thankfully pass because I don't like to speak on things I don't have great insights to. I think very limited knowledge. I think it's an interesting space with the kind of in-country industrial base. But past that, I'd reserve commentary until I look at a deeper dive. But if you know something I don't, please connect with me after and we can discuss.
All right. Thank you, Zoe. We are just at the end of your presentation, which was very amazing. And now we are going to move to our next speaker of the day. Thank you,
Great.
Zoe.
Thanks,
I'm calling Michael Owu to turn on his camera and his microphone.
Okay, yes, thank you very much, Salim. My name is Michael Iwu. Yes, so I think I need requests to also share my screen.
You just
Thank
got
you,
it.
Zoe. Okay, good. Thank you, Zoe, for that interesting presentation. Let me see if I can. Let me know when you can see my screen.
We can see your screen. We can perfectly see your screen.
Okay, good. But I just want to increase. Okay, good. Okay. Yes, so thank you very much for having me. Like I said, my name is Michael Iwu. I'm the Business Development Manager for Empower New Energy. Okay, so I'll be talking on the topic financing C&I storage in Africa. So briefly, I'll just give a brief introduction about Empower, who we are, what we do, and some of the projects that we've actually invested in. Okay, and also I'll talk a bit about why C&I storage matters in Africa and some of the challenges, just to add to what Zoe have pointed out. And also I'll talk about some of the risk mitigation strategy that we employ in investing in the selected countries. Then we'll talk about what we need to scale C&I storage in Africa. Okay, so Empower is a Norwegian renewable energy company that is a financier and co-developer that finances and builds own solar plants for C&I and agricultural energy users. Okay, I would say for high growth markets. By high growth market, I mean Nigeria, Ghana, Cameroon, Kenya, Tunisia, Morocco. It's actually relative, okay? But so far, we've invested more than $50 million to develop finance over 20 decentralized roof and ground mount solar plants in this market. Our strategy is very simple. We finance 100% equity finance, and we partner with local partners in these countries, like project developers, local project developers, and EPC partners and O&M to develop these projects, execute the project. So we own the project throughout the project life cycle. Okay, so we just focus on asset management, remote monitoring, carbon credits reporting. Our minimum threshold is $2 million for this selected market. So some of the projects that we financed so far, I'll just give a snapshot because there are quite a lot, but those projects that include storage, you have the Just Right solar PV BREST project, which is a 3 megawatt, 6 megawatt hour solar plant. We also have the UMSA project in Kano, which we recently commissioned in January. It's a 1 megawatt, 2 megawatt hour facility. We just recently commissioned the FUSA plant, still in Kano. Is similar to UMSA, is a 1 megawatt, 2 megawatt BSS system. And currently we are constructing the Just Right, the solar-based system for Jendol in Nigeria. Is for their 5 branches. That's a 2.168 megawatt peak. The best component is 3.33 megawatts hour. And the UBA project, of course, we solarized 25 branches in UBA. which is about 1.5 megawatts and 3 megawatts hour. Okay, and as we speak right now, we finance a project. Construction is ongoing in Cameroon. It's for a chocolate factory at Kikem, for new chocolate factory. Is a 1.8 megawatt peak, 2.5 megawatt hour. So we have a lot of projects with experience in financing BSS in Africa. So the question now is, why Africa? Of course, Africa, I would say Africa in terms of renewable energy is the most under-financed. To achieve the climate goal, we need about $450 billion annually to achieve the climate goal by 2030. But at the moment, we're only doing about $110 billion annually. So clearly, there's a gap for investments that needs to be filled. And according to a recent report from Clean Air Task Force, that's CATF, just a recent report in 2025, it says it costs most firms, about 78% of firms in Africa experience regular and lengthy outages. And this happens to be the highest rate globally. And the report by Forbes Africa says it costs companies 44% more to do business in Africa because of unreliable power. So clearly, there's a need for BESS in Africa because the grid is unstable, and also these C&I companies now resort to using diesel generator, which is quite expensive. So BESS system, when integrated to the mix, replaces diesel and also try to help with power quality issue. So you will ask me, why are companies not quickly switching over to BESS system, looking at the enormous benefit? Of course, financing is a challenge. We know that, according to our first speaker, she quietly said, Zoe, she said that the cost of BSS has drastically reduced from 2010, and that is clearly true. But at the moment, it's still a bit expensive. You'll be looking at about $300 per kilowatt hour to $400 per kilowatt hour. And this is quite expensive for businesses to invest upfront. So they need some form of financing. And local debt market is not helping market. It's not helping matters. If you look at the commercial banks, their rates, their interest rates are usually very crazy, and the tenor is usually between 3 to 5 years max. This does not align with BSS financing, okay? Because for you to actually break even, you'll be looking at about 5 to 6 years. So it doesn't make sense going for this commercial finance. And if you get international investors to come in, the currency and credit risk is a big issue. Okay, so you have currency fluctuation, you have off-taker credit risks. You need to do a lot of due diligence to ensure that the projects are bankable and all that. Okay, so that is why there's a need for innovative financing. Empower is in the business to provide that, to fill up that gap. Okay, so for investors that want to invest in Africa, I will advise you to take note of this page of the slide, right? So if you are investing in Africa, you need to be very concerned about your contracts, okay? So I will advise you to look at long-term financing, minimum of 10 years, and ensure you include some form of take-or-pay clauses in the agreement, and or fixed monthly payment to ensure revenue certainty. To address financial risks, I will advise that you take close look at indexation, right? Because most of the users, they want to pay in local currency. So to manage that currency risk exposure, you need to index the payments to hard currency, and to manage inflation, you try to provide some form of escalation clauses in your agreement. Okay, so also for the technical risks, you need to ensure that the equipment are 100% insured, and also there's warranty and performance guarantee. All these are captured in the EPC and O&M agreement. So you have a watertight EPC and O&M agreement. This is very important. Most of the products that you have, especially BESS, that's a battery energy storage system, they are usually 5 years warranty. You need to request for extended warranty just to ensure that you close all loops. And I will tell you for free that in Africa, collection is a big issue. So you need to consider escrow accounts and guarantees, like bank guarantees, to manage payment risks. Okay, so some of the models that have worked in Africa, right? You have the energy as a service model. Even for the BSS, you can use that. This has different variants. So you have the model whereby you pay for just the energy that is stored. Of course, this needs to factor in who pays for the charging and all that. Those will be captured in the agreement. And some variants, you have energy as a service plus some fixed payment, which will cover for the balance of system and civil works. Okay, but the best of them, the one I prefer, the one we use at the moment, is the power support agreement, the lease to own model, which is a fixed monthly payment. But this has a caveat. It has to make sense to the client, right? So there must be some form of value proposition. So when you are integrating BSS, you must ensure that the client gets value for it. Okay, so this sounds like a no-brainer, but it's very important that when you're integrating BSS, the overall cost eventually reduces. Okay, so that can be carefully managed through your design and to ensure there are no wastages. Also, blended finance is an approach that you can use for your model. When you have grants or you have local debt, you can leverage on that to have blended finance to ensure overall cheap energy to the client. And most investors prefer portfolio aggregation, just like Zoe said. You need to aggregate your small scale projects so that it can be attractive to institutional investors. Okay, so what can we do to scale, right? This is the last slide. I think standardization is very important. Standardization of the agreement, standardization of equipment. For example, in Empower, we use only tier one equipment, and we have a standard agreement, right? So that is very important. If all investors have almost similar and standardized agreement, that will encourage more investors to come in, okay? And local financing is very important so that you can provide tariff in local currency or blended finance. This is extremely important. And data gathering, right, and reporting is key to encourage investors to come in, especially institutional investors, right? When you keep data, you are able to show, track, and project revenue over time from data that have been carefully recorded. And of course, strong partnership like what AFSIA is doing, bringing collaboration between developers, financiers, suppliers, and all works to come together. This will definitely ensure that C&I storage in Africa scales. Okay, thank you very much. My email is michael@empowernewenergy.com, and that's my WhatsApp number, just in case you have projects especially that meets our minimum threshold of $2 million, we can discuss. Thank you very much.
Thank you very much, Michael. I think actually your session has gathered many questions so far, and the good thing is we have quite some time to address them. I will start with the first question here. That is very interesting because I also had the same discussion with a developer 2 days ago. It was in terms of technology. So has the battery storage technology continued to evolve rapidly? As you know, technology are subject to changes every time and evolution. How do you assess and manage the technology risk when financing long-term projects?
Okay, yes, thank you very much, Salim. When you are financing, I will encourage that you focus on what you've tested before, right? You don't want to just flow with the trend, even though it's good that you include technology advancement in your thinking and your evolution. But investors prefer track record, right? And we always work with known brands and brands that have use cases and you have references. Okay, so if you have a new technology, what I would advise is that you have some form of pilot, right, which you can show and keep data. The most important thing is performance guarantee, right? If you can see that over time the projected revenue is being achieved, of course we can consider that. Yeah, thank you.
All right. And just coming to one question from Patrick, and this is what we usually hear from investor. Money is there. We have money. If you have a project, please come contact me the same way that you just dropped your contact. So at the same time, we have seen that many investors still perceive African energy project as a risk, as a high risk. So how can developer and financier work together to improve investor confidence and attract more private capital into the sector?
Okay, yes, thank you, Salim. I think the major issue, like I said, that we have presently in Africa is this collection rates, right? Is a big issue. Okay, so if as a developer, if you are able to address that risk, you work with credible partners. First of all, you work with very credible partners, and you want to show that you are able to manage the risks of collection, i.e., the contract should be bankable. You should have some form of bank guarantees to give these investors confidence that their investment will be recovered. Because we have a lot of investments in Africa that these investors struggle to get back their fund. Okay, but if project developers can work with EPCs to ensure that the investment is able to be recovered. Of course, there are a lot of funds available to scale. It's just for you to have bankable projects.
All right. So I'm going to take two questions at the same time because they are somehow related. There is Henry and Alexander. So Henry asked, how does energy as a service outweigh other financial models in Africa? Also, Alexander also mentioned something a little bit different. What is the difference between energy as a service and power support model?
Okay, yes. So for the energy as a service model, the payment is mainly based on what is metered, right? What is consumed by the consumers, the users. Okay, so they pay for what is consumed. You can have some form of take or pay clause to ensure that you have minimum payment. But in the case of power support agreement, is a fixed payment, right? Is a fixed payment. Whether the users consume this energy or not, they pay. Is like a lease to own. So they own the asset over time. They pay fixed payment whether they consume it or not. I think that's the major difference.
Okay, so last two questions before we close. So commercial and industrial clients are increasingly interested in storage solution. What financing model are currently providing most effective for accelerating CNI storage adoption in Africa? I've just seen that you have proposed a different financing model. So they just want to know which one provide actually the most effective solution to accelerate CNI storage adoption in Africa.
Okay, yeah. So as mentioned, I know I said that. I said the power support agreement, whereby you have fixed monthly payment over a long period of time. I think that's the best, so that there will not be arguments on payments, deemed delivery, and all those heated arguments. Okay, if you want to invest and predict your revenue, I think you should go for the fixed monthly payment model, which is the power support agreement.
Okay. Last question here. We have just noted that you have proposed a number of risk-proof structure, and from your experience in the markets, to what extent does such financial structure impact the end user affordability?
Okay, yes. So thank you very much. I think this is a very interesting question. But what you want to do in anything, what I will tell you for free, the overall payment, the overall cost of your system, the cost of energy to the end user should be lesser in the first place before you even go into the construction and all that, the investment. It should be lesser than what the customer or the end user is currently using. So after factoring all this mitigation strategy, of course, your financial model will have insurance. Is a given. You must have insurance in your financial model. The other things I recommended, they are not exactly expensive, right? Like the bank guarantee, maybe you have 3 months or 6 months upfront monthly payment as bank guarantee. These are not exactly expensive. So the overall cost, just ensure that the value proposition to the client is clear, in that if he's paying 100 million before, and now you are bringing a solution of 40 million naira, at the end of the installation, he should be paying, say, 80 million. If that is not what you are doing, then there will be buyer's remorse, and there will be difficulty in getting back your investment.
All right. Thank you very much, Michael. You've really managed to address as many questions as possible. And I think this is our time to move to our next topic of the day. And I would like to request you to turn off and on your mic and your camera. Thank you very much,
Thank
Michael.
you for having me. Thank you.
You're welcome. And I'm going to welcome Ogosa Aaron. Ogosa, I can see that you are with us, and I will request. Perfect. You just
Hi.
read in my mind, Ogosa. I hope you're
No,
doing well.
I'm doing well.
I
Thank you.
hope
I've
you're
been
doing
following the
well.
conversation.
And your topic is very interesting, because I'm also personally looking forward to learn a little bit more about that solution that you guys provide, which is a bit different from what we usually hear from the market. So Ogosa, she's the policy and market manager at the Long Duration Energy Storage Council. Ogosa, I'm heading over to you, the presentation. Thank you.
Thanks, Alam. I'm just going to share my screen as we've done before, but please let me know when it's up.
Yes, it's
Oh, awesome.
okay. It's perfect now.
Thanks. Hi, everyone. Hello from Lagos, Nigeria. My name is Oza Rahan. I'm the Policy and Markets Manager at the Long Duration Energy Storage Council. Previously, I've always worked on the continent, actually. I previously worked on hydrogen policy with the Global Diplomacy Program in Europe, and which covered decarbonization across Africa, as well as emerging nations for hydrogen. So hydrogen is a form of LDES, but I'll get to that really shortly. Today, if you permit me, we're going to be talking about beyond lithium, so beyond kind of the typical best storage that's existing in Africa, and what LDES can provide for the Africans' energy transition. I'm going to just have a quick run through on how storage exists in Africa, which I think Zoe and Michael have done a great job of capturing already, the future of energy use in Africa, where storage fits in, and then just introduce the work we do at the council, and then how Africa can prepare to scale for elders and bankability. I really like the fact that bankability has been raised a lot on this call, so we're going to dive into that bit. I won't go into this in detail because the way Michael have really shaped the scene already, but as we know, kind of like storage does exist on the continent in different forms, and we're actually seeing a ramp up on the way like storage can participate either in revenue capturing or in STEM capturing across the continent. So I will speak on that a little bit as well. Thank you, Zoe and Michael, for doing a bit of groundwork. So the current case for BESS at the moment is that we have battery systems, solar and storage battery systems, and even the CNI systems that go kind of in the standardized 4 hours duration. However, long duration energy storage, the way we define it at the Elders Council, captures for 8 hour plus. These technologies are ready, but where does this storage actually fit beyond lithium? So that's a big question we're trying to answer today, and I hope I do it justice. When we think about dispatch capabilities, right? Elders is able to provide a wide range of that. If you look at the need for solar and so solar installation for renewables, there's a need for energy shifting. And we've currently seen that in the desirability for governments to have access to intraday, multi-day, multi-week and seasonal duration. And really what that means is for peak times when obviously the sun is shining extremely well, and the penetration for renewables are really high. Countries are able to store that renewable energy and basically dispatch it across a whole day, so 24 hours, 3 months for different seasons. And we'll talk about the technologies a bit later. And just in the grid, as usual, we've seen the different ancillary services that Elders can provide on the grid. So as you know, African countries have one of the weakest grids globally. And as more countries and more governments are now capturing the need for energy stability, there's now a requirement almost for grids to be as functional and flexible as possible. So as renewable energy grows, as energy demand grows, as the grids become more complex, the future of energy use requires more Elders deployment. There was a recent announcement this week about the number of data centers in Lagos alone. So we're seeing more data centers come to the continent. We're seeing, as Michael and Zoe has captured, we're seeing more renewable generation happening. There's more investors wanting to ask, where are these projects? How are they being deployed? How can I make the system inquiries? We're also seeing the need for more less fragmented energy supplies. Obviously, the global wars and the geopolitical issues that have been happening over the last 10 years, actually, right from the pandemic into everything that's been happening prior and after that, we've seen the need for energy security for different countries become a top priority more than it ever has, even with fossil fuels. So the future of energy use in Africa. So I really just wanted to give like a bigger landscape of where we are as a continent and what we find, what we should be looking for when we start looking for infrastructure and energy systems. So I used to work in hydrogen policy, and if you're familiar with hydrogen space, there's a massive need to deploy for power to X, right? And there's also need for more heat industrializations as we look into industrial decarbonization. I think Michael had an example of a chocolate factory, and I can imagine that chocolate factory is going to need a lot of renewable dispatchable power to actually need for their processing operations. There's a lot of storage that comes into play because there is now options that companies can invest into cleaner technology metrics that allow them to access credit systems, that allows them to access particular green financing. So now a lot of projects, even in Africa, positioning themselves to make sure that their infrastructures, their industries are able to demonstrate a sense of low carbon neutrality in a way. And Elders technologies have been proven to actually help maximize energy system flexibilities that allows for more renewables into the systems. So that's where the good news really lies. We have technologies which are available to deploy today. And I'm going to give some case studies in a bit too. So maybe a bit about us and the Long Duration Energy Storage Council. So like I said, I'm the policy manager at the council, and we've been around for just 4 years now. What we are is we are the only global trade association that captures for long duration energy storage globally. So we have presence in over 29 countries at the moment, but our work is to really capture the momentum and the movement and the growth for Elders globally as more countries and markets are beginning to understand the roles that they would play in making sure we reach our energy transition goals and industries decarbonize in a way that's reliable and efficient. So what we do also then provide is we have, I'm gonna go here. We have also grouped our technology members in 4 different families. So I think we've heard over the call, there's been mention of BESS, and I'm thinking about lithium, and there's mention of elders, but elders isn't just one technology. So elders actually is a group of different technologies that can dispatch and charge energy for 8-hour plus duration. That's it. It's not one technology, it's a group of technologies. And when you look at the different technologies that we have in our council, which captures a global share, we've managed to group them as thermal, electrochemical, mechanical, and chemical. And I'll kind of speak more about that in a bit. But what I actually wanted to draw the opportunity to is that Elders is able to decarbonize today across electricity markets of the grid, industries like the industrialization and the need for Africa to have more industries and cotton, coconuts, any renewables, anything we're actually industrializing for. There's also the need for transportation. So I'm in Lagos right now, and there's a massive, massive need for EVs that's happening. I was in Kenya, there are a lot more EVs coming up. They would need a lot more storage backup. There's also buildings. So the race for the edge building certification has been happening, and more like automated and interconnected building facilities. So Elders actually has a role to play in all of these facets of development that currently exist in our continent today. So I was thinking about the different families, and this is where I will just maybe squeeze over a little bit. But we've been able to class them across technology delivery types, right? So when we look at electrochemical, we're looking at the power-to-power technologies. So in this case, it's kind of like what everybody's kind of used to. You have your flow batteries, your metal air, your lithium-ion batteries, which do the typical round job of a charge-discharge solution. And typically, they could go for your BESS systems, for example, that are 4 hours into sometimes 72 hours dispatch, so about 3 days. So they're very good for more grid flexibility and ancillary services on the grid when you're considering them. Then we're going to move to the mechanical. So this, if you've heard of a pumped hydro storage, that's a mechanical form of elders, and they're more of a charge, reserve, and discharge facility. And these, obviously, if you've seen a dam before, I think we have a few in Africa. We actually have a few in Nigeria as well. The idea is that the mechanism is mechanical, as the group says, but it's generating the energy, preserving it, and dispatching it when needed. So it's not kind of like an AC/DC facility in this case. And because of that reason, we actually have compressed air energy storage systems, pumped hydro systems that can last up to like 5 days of just continuous dispatch, which is really exciting when you think about the fact that in Lagos right now, it's been raining for the last 2 weeks nonstop. And I don't think the sun has come up in a way that we're able to dispatch renewable energy as frequently as we'll need. So we'll need that reserve and dispatch facility more as a country like mine begins to deploy and get for energy transition. And then thermal, so the thermal is very different from mechanical and chemical. We do have thermal from power to heat. So when you look into sensible heat technology, so if you're, for example, manufacturing chocolates. Sorry, this is going to be a chocolate heavy example today. A lot of the inexpensive technologies that are used in manufacturing chocolates would use kind of the cementing facilities for thermochemical applications. So they will just discharge from the grid or the renewables or anything, and actually just use an output power to electricity. But then we have power to heat. Now, this is a bit more complex. This is where you would use power to heat elders in smelting of steel, for example, where it charges from the renewables and then it dispatches in a heat delivery system or a heat firming system that's a bit more thermally discharged, if you like, but the outputs are actually heat. So thermal actually goes to power to heat and power to power. And then hydrogen, like I mentioned before, is a form of elders. And elders, hydrogen does exist in 2 forms. So there's the power to power, where we have the output as electricity, and a power to power and a power to X, where we have the output as ammonia or ammonia into fertilizers, as you like, or different hydrochemicals, for example, what's used in tequila. Okay, so I wanted to also pause a little bit and let everyone know that the pace that we currently are when it comes to elders globally is a pace that we've never seen before. The fossil fuel industry was evident in deploying capital easily, but what's happening now is that there are different groups of technologies for elders having to essentially deliver in a market that's never prepared for it. And I think that's the most exciting thing about the work we do at the moment. And so far, we've been able to position 55 gigawatts of elders planned across 150 plus projects. $5+ billion in announced funding since 2022. And like I mentioned before, we have elders deployed in 27 countries globally. Now, this gap comes shockingly because if you look at the map for elders globally, and this is excluding pumped hydro, there's barely anything in Africa. So we do have projects kind of like in Nigeria, actually, in the southwest of Nigeria, in Sapele Delta State. There are some projects in Mauritius. There are some projects in South Africa. There are some projects out in the North Africa as well. But this image is very captivating because it just shows that there is so much opportunity for growth as Africa positions itself for this global industrialization hub for elders to participate. And the numbers are very clear. Our predictions state that by 2035, we're going to be getting to a point where new mechanical technology types and elders will actually participate more strongly in the global cumulative elders capacity. So we are going to see like more technologies which are easily able to deploy within months being deployed, as opposed to pumped hydro storage that obviously take a lot longer to get permits, site permits, and the rest to end up being deployed. I won't touch on revenue. I'll touch on revenue briefly. Now, there's always this idea that because elders technologies are very new in a lot of system operators, so Africa is not an exception here. There are a lot of governments and system operators that we work with who haven't yet understood the revenue options that elders can provide to your system. So we have things like energy shifting, which is going to be a big priority as more data centers shape up in Africa. We've got congestion relief. So in Africa, we have the different power pools. So we have the South Africa power pool, we have the West African power pool, and the idea for interconnected transmission has been something that's been quite weak on the continent. But in any case, if the African Union makes it arbitrary for the different power pools to start raising their interconnection needs, we would have to actually look at conduction reliefs. And that's where elders could participate in making sure if Ghana has got excess renewables, because they have storage, they can dispatch to Togo, for example, or to Nigeria within the West Africa power pool situation. Same thing we kind of saw existing with the SAP and ESCOM in Namibia and in South Africa and Botswana. If there was more storage on those systems, the shortages, I guess, would not have been as complex. We actually saw that in Europe between the blackouts, if anyone remembers, in Spain and Portugal sometime last year. And really that's just an opportunity for elders to play a role, because those kind of dispatch issues can easily be mitigated where we're advanced. And there's also revenue for that, because if you're pricing for when needed is higher, you can obviously make money back from your grid services. So, the backup power, ancillary services, like I mentioned, your retro reference response, and peak shavings as well are good revenue costs for governments, as well as technology providers, as well as investors, which I'll touch on a little bit now. So there's been a lot of conversation from Zoe and Michael about bankability. The Elders Council actually launched bankability reports in January, where we captured the different investor types, funding structures, and where elders can actually participate. Now, this was a huge project for us, because not only are elders technologies very novel in the sense that a lot of people, even like just now, we're hearing elders in a singular portion. A lot of people don't know the capabilities of elders technology. So framing the funding and framing the bankability criteria at this very early stage was very critical for the Elders Council. And we've been able to provide a framework that I will share a link to, or is available on the website, that could support family offices, the financial VCs, the African infrastructure banks, the loans, the strategic utility players, to know the kind of agreements that they could consider, the kind of elders OEMs that could play a role in making sure that they secure the highest guarantees, the highest profit, and overall accountability for the cost sharing when it comes to elders projects. And yeah, we also had like a checklist that obviously was a framework criteria for investors and lenders to consider. So Michael and Zoe did mention this, but I guess there are elders bankability reports has been able to capture kind of the 5 key pillars that investors into elders can consider, and this bears no difference to African countries at all. And I'm looking forward to obviously like conversing with a lot more project developers that are wanting to participate in the African market and show that elders can demonstrate value. And this is just kind of some more notes on what we've captured at the Elders Council as key policy and markets priorities for bankability. I like the fact that Michael did mention there was a need for more direct financing model policies that capture duration and payment facilities. And Zoe also did mention something about the actual value for storage that has to be presented at the beginning as well. So these are all very valid cases for BES. But I guess we elders, we kind of have to take the next step to actually improve investment risks from the onset. Now going to case studies real quick, and I've selected case studies that are very applicable to the continent. So obviously we have case studies from North America, Canada, Australia, but I've really tried to come down to markets that are very relatable to where we are in Africa. In India, in Karnataka, there was our Energy Dome was able to announce a project with NTPC, which is the Indian Electricity Transmission Network, for the first large-scale elders installation. This is going to be one of the kind of the biggest projects for elders in India at the moment, and it's a thermal power station to increase renewable flexibility and reinforce India's supply chain. So because India is looking to industrialize and have more manufacturing capacities, like I said before, they're actually looking to have more thermal elders to make sure that they reduce their overhead costs for renewables, for example, by integrating renewables into their production line. So this is an example of California. So in California, Energy Vault, which is a member of ours, launched their hybrid hydrogen battery system for 48 hours clean power supply to a mini grid site in California. So this is another exciting project because there's a 20-year operational lifetime. And one thing I actually forgot to mention was that most of elder technologies most of all these technologies do not require switchovers. So you're not changing your batteries every day. You're not changing your batteries every month. There is up to 20-year operational lifestyle. And what that means is also elders contracts can be as long as 25 years, which kind of gives the overall bankability security when it comes to revenue and investment projections as well. And I also have an example from Israel. Now, this one is actually becoming one of my favorite projects right now because the project is supporting an industrial life for manufacturing, and what their plan is to actually just use solar towards manufacturing clean process heat in Israel. It's a really fascinating project, and I'm looking forward to kind of having more African countries demonstrating use cases that we can obviously share with the world with what's happening. And lastly, I guess I had an example here of what's happening with compressed liquid air in Japan. And this project is a synchronous power to grid, providing grid stability. Basically, the Japanese government had said they're trying to get to 2050 carbon neutrality goal. How can we get there the quickest? We're going to have elders integrated into our grid to make sure every other day that dispatch electricity is used, we're able to make sure that it ties into low carbon emissions electricity being generated, which is super exciting because we have all these commitments to meet anyway, right? And then I guess lastly, I also wanted to share that we've been busy at the Elders Council over the last year. We've put out 5 reports and we have 2 upcoming as well. So we looked into the elders implementation best practices, looking at what countries and policymakers can start considering if they want to invest in elders or have elders as part of their procurement need. We also have a annual report that we published, which looked at elders as just a value into different systems. We've also looked into data centers with elders, which is a member inclusive report that obviously if you're not a member, you don't have access to, unfortunately, and the bankability one. And we've then touched on cost benchmarking, where we were able to capture the cost for different elders technologies and where that ramp up over the years is evident. We did a case study on the New England ISO, kind of capturing like where that process from gas fire plants into elders looks like and what the cost alignments can look like as well as technology users. So yeah, we've been busy. The QR code on the top right scans to our website and these reports are available. And I'm looking forward to the questions. Thank you so much, everyone. That's my email address. You can also connect with me on LinkedIn, and I'm looking forward to all the questions that we're gonna get.
Yeah, the questions are
Thanks,
coming in
Anna.
very, very brutal. The questions are very brutal, but I will start with one, not question, but something that we usually don't receive quite a lot. Apparently, you have friends who also join you here. There is just one of your friends who say, hello, Ogosa, your friends here, Rachel from Nairobi.
Love it. Hi, Rachel.
All right. Diving out to, because of time, we just delayed a little bit. So I'm just going to take 2 pertinent questions here. You just mentioned 4 family of LES technology. So there is a very interesting question here to understand which alternative storage technology show the greatest potential for the African energy system and why. I've just
That's
seen
it.
your case studies. most of them that are out of the continent. So they want to
Yeah.
understand which one is really fits to the African continent and why.
That's a great question. And the answer to that is it goes down to what the projects or what the countries need. There are different technology types applied to different use cases. So obviously, if you're going to have a manufacturing system that was manufacturing chocolate, for example, you probably won't be investing in a hydro pump storage because that's going to take years. You probably just need like a thermal application of some sort. So it really depends on what the use is. And one of the things that you've seen projects do is project modeling. So when you do a project modeling, it helps shapes up the different needs that you have, and then you match that with the different technologies available, and you're able to get the technology that you need. I will go to the electricity grid because I guess that's one that crosses across different African countries. And when it comes to the grid, one thing that the European Union is requiring its member states to do is a flexibility needs assessment. And really what that means is the EU has told all its countries, all its members countries to submit a flexibility needs assessment that shows where their requirements for carbon neutrality, where their requirements for district heat in the US, in Europe when it gets colder, and also with the opportunity for grid stability, because a lot of them are actually interconnected grid systems in Europe. And now what that did is it showed different countries where they're placed now and where they're placed in the future. So they can see that gap. And one thing we haven't done as a continent, at least I haven't noticed a lot of countries do, is do a feasibility needs assessment to say, this is 2026, this is where our grid is right now. Our population is going to quadruple by 2050. How are we solving the little gaps for things like system inflexibility and system reliability as we're trying to put more renewables into the system? So it's not a case of what technology is best, it's a case of where does the need exist? Identifying that is often the hardest thing to do. And that's why we tend to demonstrate these different technologies, because we can get countries and manufacturers and investors to then be, oh, okay, that's a need that we need. That's something that we need. And here's the technology that can work with it. And I hope that clarified the question.
Yes, and just one last question. I think this question also could really fit to one of the sessions that we have on tomorrow and also on Friday, but I'm just addressing it here. What policy and market mechanisms are needed to accelerate investment in long-duration energy storage across Africa?
Another great example, and I use another case study. So one of the policy mechanism that has been a golden star for us right now is the cap and floor schemes, essentially where technologies are being so this currently exists in the UK. This is one of the kind of the shining stars with policy. But what happens with cap and floor is that the government's able to match investment in financing for technologies that come into the system for a period of time. Different policy mechanisms for elders have to be considered by what the governments or what the investors want out of it, right? Like if you're a country that has a social welfare system, for example, where you're trying to reduce the cost of electricity for your customers, you're currently looking for a policy mechanism that allows the customers to pay as less as possible. So Nigeria had the Electricity Act recently, and that act was looking at different states having their own renewable energy capacities. If they wanted to have elders in that system, their policies would have to be for one that either allows the renewable electricity manufacturers to make revenue now, or a system that allows the government to pay the eldest technologies to be able to deploy quickly enough to solve for the challenges that exist. So the policies do vary. Africa isn't a one-size-fits-all either. The issues that we have in sub-Saharan Africa are very permanent and different to the issues that we have in North Africa, and same as West Africa. So we also need to like curb that. And one thing I'm looking forward to kind of like into the next few weeks is having more conversations with African leaders and African utilities to really understand how the different market alignments can be well positioned.
All right, and also a personal question from me, because I really wanted to understand. I wanted to understand this. I was also discussing with the developer, and I just brought up to their attention about what you do. So now we are talking about storage. Storage is not bankable. Everybody now wants to implement storage solution, and talking about bankability and cost consideration. We know the cost of PV and storage has dramatically decreased, but you are just presenting the solution that the African continent is not really familiar with. Do you really think, in terms of cost consideration, it could be also it can compete with the lithium solution that are provided? Because I guess yours might be a bit expensive than the solution that we currently have. So just
Yeah,
in terms of cost consideration.
yeah, of course. No. You're right. At the moment, there are some technologies that are a bit higher pegged than others. But one thing you would consider is that an LDES deployment for technology can last up to 50 years. If you have the good LDES technology, the right appropriate LDES technology in fit, that's a 50-year investment that you're making. And over time, those returns make fair for themselves, right? I think the other issue is supply chain security. So we're still importing a lot of our solar and BESS from every other place but Africa, right? And if we are going to get to a point where we need to manufacture locally, and we haven't done that yet, one thing that LDES does provide is a security for supply chain. It's a heavy capex, but long term the OPEX does justify for itself in the sense that we won't have to keep waiting and hoping that there isn't another canal that gets stuck or another global geopolitical issue that affects how energy security is placed. I think that's just one of the curves that I would say to a lot of African developers is the cost is significant. Evidence solar was significant when it started. Solar was high, but this is the right time to start investing in LDES because the future of the world is just very different right now. But we have also in a bankability report stated the different ways that investors can approach insurance risk as well as financing risk. And I think that plays the measure to the big infrastructure financiers like Zoe had mentioned, who are ready to actually take the plunge as long as the developers understand the long-term cost requirements as well. So yeah, it's not cheap, but it's an investment that's worthwhile, 100%.
All right, thank you very much, Chukwueze. It was very interesting. And yes, now I'm going to welcome our next speaker of the day, who will also present a topic that we cannot leave behind. So I will ask Doreen to turn on her camera and microphone. I'm going to introduce Doreen. She's the Chief Product Officer at Basigo, and she will be discussing about e-mobility and storage. So as I was saying, e-mobility now is a topic that we cannot leave behind. And Doreen, I'm very happy to hand over the presentation to you. Thank you.
Perfect. Thank you so much, Salim. In some zones, it's already afternoon. In some zones, it's still morning. But I'm sending regards to you all. And yeah, I get to share my screen. Please confirm you're able to view my slides.
Yes, we can perfectly see your slide.
Perfect. All right. Thank you so much, Salim, and thanks for the introduction. I'm privileged to lead the product development aspect at Basigo that covers vehicle engineering, product development, market development, and of course, battery energy storage systems development as well. Basigo is into electric vehicle provision within Africa, and I think we're really proud that we are the leaders within East Africa, where we boast of a fleet of now 136 electric buses. This is between Kenya and Rwanda as well. So we are providing electric buses really as a competitive alternative to the diesel buses. And yes, while we keep saying, oh, e-mobility is the future, I think Basigo has just come in to show that the future is today. We are literally driving that future. And now back to the topic on e-mobility and storage. I think it goes without saying that e-mobility already utilizes storage because the battery on these vehicles is already storing the energy. But I think in regards to this conversation, we will look at now powering these vehicles, where I'm going to focus then on charging. I will share an overview on really why does e-mobility need the storage, what's a practical use of storage, and with specific reference to the battery energy storage systems, a quick overview of what a standard charging depot would look like, and then we can get into the numbers and ideally where we should be focused and where exactly the opportunity lies for Africa. what are the key challenges that we face today, or what's the reality as far as EV is concerned? And these are some of the aspects that make Africa unique to the rest of the world. First and foremost, and I'm going to speak really based on the experience that we have at Basigo at the moment, where our daily vehicle utilization is high. So I'll give an example. Yes, we deal with buses, and here in Kenya, for example, we have buses within the city that travel an average of 200, say, to 250 kilometers per day. And then when we speak of intercity, this goes to, we have fleets that are traveling over 400 kilometers just within the day. And why I'm comparing this to the rest of the world, or even just for the passenger vehicle, and again, this is where I'm focusing really on the commercial EV fleets, because there's less mobility, or rather there's less mileage that we are seeing being covered by the passenger vehicles. So imagine if you're just moving from office to the workplace, what you're covering is much lower than what the public transport vehicles are covering, what trucks are covering between, say, point to point delivering goods between different borders. So this is kind of why we focused on the commercial EVs, because we are seeing much higher utilization, and that's where greater impact could be as well. So yes, unique to Africa, we have higher daily vehicle utilization. And then we also have emerging charging stations. What does this mean? There's always the question of, should we have EV charging stations first, or should we have the electric vehicles first? And at Basigo, we believe that these are two things that should happen at the same time. Yes, do introduce the vehicles, but at the same time, develop the charging infrastructure. And so the challenge across most of East Africa and really the rest of Africa is we do not have as many charging stations. A few are being set up within cities, but should you go beyond the city, then there is a challenge. So this is what I'm saying, like the charging stations are still emerging. They are not as many and as developed as we would have liked, or some of them are even just still AC charging, which is much slower compared to the DC charging that you would need for, say, higher battery capacity and faster charging as well. The other key challenge is the fact that the grids are slightly unstable in some cases, again, when you go outside the major cities. So you'll find that either the grids they have not been extended to the other parts of the city. Overall, in Africa, the electrification stats are different from country to country. But speaking for East Africa, right now, in some of these countries, we have electrification as low as 50%, 70%. But then even if it's electrification, it does not mean it's the high voltage that would be required to support charging. So again, either the grid is unstable or it has not been developed enough to reach certain areas. And then there's also a limitation on infrastructure. One thing that really has hampered part of our growth has been the fact that, one, it takes long to identify suitable charging sites, but then also to develop them. And why is this the case? Because we are trying to roll out, we are rolling out fast DC charging. What happens is we need to be able to access high voltage power. However, in some of the areas that have already been set up, you find either you do not have transformers that have the right capacity to be able to set up, or rather to support the setup of a charging station. So what happens is you need to be able to come in and do what we call a power upgrade to that site or to that location in order to have sufficient power. Because again, when we are thinking of commercial vehicles, or even just the rollout of EVs, you're not looking at charging, say, just one vehicle at a time. We're looking at depot charging. We're looking at being able to support multiple vehicles to be able to charge at the same time. So in that way, that's why you need transformers of higher capacity, so that you're able to set up either chargers of higher capacity or even multiple chargers. I'll give an example. If you need to set up a depot that can support even just 20 electric buses, and just imagine what that would take for that to be doubled to 40. But to comfortably charge 20 electric buses, you're going to need power of between 1 megawatt and 2 megawatts, depending upon, again, the battery capacities of these buses. So if we assume about 180 kilowatt hours per bus, for 20, that's the energy requirement, say for top up through the night. That means for 20 buses, you're going to need about 3.6 megawatt hours. So to deliver that, either we're going to do what we call sequential charging, where you have fewer chargers and then you're charging one bus or one vehicle after the other, or you're going to have to roll out a huge number of chargers, and that is also going to call for a bigger transformer. So, and it's right now it's been, I don't think we've ever found a place where we have a transformer that is ready to go and it's ready to supply over 1 megawatt of power. We've always had to do the upgrade for that. And finally, the fact that most of these electricity tariffs, and we do understand from the regulators. I wonder if we have regulators on this call. I don't want to end up being on their wrong side. But then you see, most of the over tariffs have been set without the electric vehicle in mind. So we are ending up with still holding on to traditional tariffs where, and we do understand where they're coming from. I mean, to limit demand or because of the high demand during the peak hours, in order not to strain the grid, yes, we do understand that there is a punitive tariff that comes with that and that will demand charge. But in that case, those costs are much higher. I'll give an example in Rwanda. I spent the last 2.5 years setting up Basigo in Rwanda, and the demand charge in Rwanda is about 8 times the demand charge. So this is peak. The demand charge of peak is about 8 times the demand charge that is off peak. So of course, should you end up then needing to charge during peak, and one of the policies that we have at Basigo is to avoid charging during peak hours so that we do not add further strain to the grid. Instead, we try to do most of our charging during the off-peak for 2 different reasons. One, to avoid strain in the grid, but also to support the governments in consuming the energy that would have gone to waste otherwise during the off-peak hours. But then that's who we are as Basigo. Other different entities are going to have different needs where you're not able to not charge during the peak hours. So you're kind of forced to do that. And that leads to high tariffs and high costs of the energy and OPEX eventually. So what does battery energy, and specifically right now I'm looking at battery energy storage, and just like the previous presenter highlighted, where this also combines with, say, the solar aspect. So what does the battery energy storage system then come in to help with? One is going to be on grid, rather power reliability, again, where the grid has been unstable or it's not reliable or it does not reach. We are able to then the battery energy storage system comes in to ensure that it is providing stability as far as the grid is concerned. Of course, peak shaving, I don't think all the previous speakers have really talked about that. I don't think I have to add much more to it, but then, yeah, like just helping to manage the demand during the peak hours. So let's go back to the station that I just gave an example of. So we need about 3.6 megawatt hours to charge just 20 buses, right? And if all that is now going to come from the grid during peak, if we do, then there's a strain. And say even if the power is at about 1 megawatt, you're still straining the grid in that regard. But then when you introduce the battery energy system and say, for example, 50% or even say 80% of that energy is coming from the storage, and then if you must charge during peak or even off peak, there's less strain onto the grid where 20%, where the grid is just coming in to support 20%. The other key aspect that this also helps with is in power management, being able to keep better track of, okay, what are the statistics that we are seeing across the power that's being consumed. The other key aspect that energy storage systems, of course, comes into help is the integration of the renewable aspect. Let me give a quick example. In Kenya, the grid is about 92% renewable. When we move to Rwanda, that's a different story. It's at about 58% renewable. When we move to South Africa, that's even going to be a much more different story. But so what the energy storage systems come in to help is also, it goes back to how are we powering them? How are we energizing them? So if it's purely through solar, then we are contributing, we are growing the contribution of the renewable aspect generally to the EV charging. And if some of it still has to be charged via the grid, so for example, there is the opportunity to also charge during off-peak, like charge these batteries off-peak for utilization during the day or during the peak hours. In that way, then perhaps if your grid is still not as clean, then it's kind of it's going to give the same story. However, if there is a solar integration to it, then you're boosting the renewable aspect of the energy. Then, of course, just like everyone has highlighted, the grid upgrade costs become much lower because, again, you do not have to go through the transformer upgrades that we have referred to, and you end up with much lower operational costs. There has been a quote that, the cheapest power that you're going to ever have is power that you have generated yourself and power that you've transmitted yourself. So if you are harvesting this energy directly and storing it by yourself, then it's really going to be the cheapest that you will have. The capex costs are still marginally higher, but then over time, like looking through the life of, say, that charging station or the life of the buses, that cost is really spread over time and it becomes less significant. And the other key aspect that battery energy storage systems come in to address is really backup resilience. Again, it defeats the purpose if you're running an electric vehicle, but then you're charging it using diesel or a coal-generated power. No offense to the rest of the world that does not have access to high renewables, but it kind of lessens the impact. And for us as Basico, we are really mission-driven. The drive is to try to reduce the climate crisis that we are experiencing as much as possible. So backup, say, for example, from diesel generators is a no-go for us. And so it really does not make sense for us to say, oh, we're going to power the EV with a diesel generator. Instead, if we had a storage, then it makes that backup option much more viable.
Sorry.
But then also...
Sorry, Doreen, just a question and something that I've realized in the audience, they're saying that the slide is not moving. So they're asking if it's normal or if you are facing any issue changing your slide, or if that's what you both hear.
I'm still on the same slide.
Okay, perfect.
We're still here. Yeah. So in terms of energy independence, we have some of our grids that rely, say, on diesel in some of the countries, and these countries also go ahead to import diesel. In East Africa, we rely 100% on imported petroleum products. So that means, give an example of the current crisis that's going on due to the Middle East conflict, where prices have shot up by more than 20%, fuel prices have gone up by more than 20%. And what that means is, should we continue to be reliant on international energies, then our transportation continues to suffer as well. Because, say, fuel prices have gone up by over 20-30%, that has led to an increment in public transport fares of roughly the same amount. I think in Rwanda, there's where that price even shot up by almost 50%. So if we have our own storage, energy storage systems, then we reduce reliance on that. And finally, battery energy storage systems also give the opportunity for circular economy as well as battery recycling initiatives. And I'm going to explain this a bit more in the following slides. So on my right, we have a quick picture of what does really e-mobility look like across e-cars. So this is the EVs, or what we call the passenger cars. Across the globe, we are seeing that with the shift that's happening, we're going to have about 560 million EVs on the road by 2040. This is in about 14 years' time. And that will be about 33% of the global fleet. It will be electric. What will that mean? By that time, all over the world, we will be requiring about 550 TWh in terms of what we will be consuming on literally over the period of a year. That is how much we'll be utilizing. As far as electric buses are concerned, the projection is to have about 2.3 million of electric buses across the globe. We have seen where Europe has really advanced, and for them, their conditions are every new bus on the road has to be electric. And I would also like to applaud Rwanda. Rwanda has come out and categorically stated that for their city, Kigali, every new bus that's coming onto the road is going to have to be electric. So this was implemented last year, and I think there is also direction where most likely the same policy will apply to intercity movement. So we'll definitely see more and more cities adopt electric buses, and right now it's anticipated that over 2 to 3 million of buses will be electric by 2040. Again, trucks. I'm personally really impressed to see the growth of and the projection that electric trucks is taking. Previously, electric vehicles used to be thought of, oh, they are too fragile, they can't handle a lot of cargo, or they can't handle hills, say that the terrain in Rwanda. But it's been 3 years of this being proven, for example, in Rwanda, in other terrain like Nepal, where Nepal has really gone ahead to adopt the electric buses and electric vans. Trucks, we are beginning to see trucks being integrated, electric trucks being integrated in the logistics sector. And the projection today is about 15% of global truck sales by 2030 should be electric. Of course, China is really leading as far as these numbers are concerned. And my hope really as an electric vehicle enthusiast is that the rest of Africa will be able to pick this up. And then there is also the electric trains. I think in Africa, the only electric train that I can speak to is the one in Tanzania. Do we have any Tanzanian on the call? Big ups to you guys. Thank you for showing us the way. So with that quick background, I think this is really a quick repeat of the previous slide, but just showing what the main challenge is, what happens without storage, and then the advantages that then storage brings. Again, I will just summarize this in terms of storage for e-mobility leads to better and stable charging operations, number one. Number two, lower energy costs. Number three, there is a backup for charging. So in case the grid is out, the fleet does not then have to experience downtime. There is backup to keep the vehicles moving, increasing their uptime. And then again, there's no dependence. There's no need to depend on the generator. So what in a day-to-day operating scenario, what does storage then look like for us? In an EV charging depot, so again, let's think of where we need to charge a depot that's charging about 20 buses. I'm keeping the number modest, but I know right now our target is to have charging depots that can support 50 buses in some areas and over 100 in some other areas. So a typical depot is going to constitute of the chargers, and by chargers here, I've already integrated again, there's AC charging, there's also DC charging. But on my end, I will definitely be pushing for DC charging. That's where the world is leading. It's much faster. We have impatient drivers who do not want to wait for very long while charging their vehicles. So DC charging really provides convenience and fast. In such a case, we'll definitely have to have solar integrated into the system. We have a battery storage system and energy management, and then connection to the grid where we are talking about the transformer and all that. So in a typical operating scenario, during the day, we would then use solar to power the loads, and then excess solar is being used to charge the storage. During the evening peak, Then the storage comes in to support the demand so that, there's peak shaving. This reduces the draw from the grid as well as spikes as well as the costs. And then the energy also comes in to support during outages. So really, where does that opportunity lie for us? We have to recognize the fact that we have these two systems that are really growing at the same time for us in Africa. We cannot say e-mobility is already as advanced, neither can we say that energy storage is already as advanced. So both of them are really growing at the same time. What does that mean for us? We have a great opportunity for us to integrate, to have like an integrated ecosystem where you have the vehicle, we're planning for the rollout of the vehicles, the charging design of the charging infrastructure, integrating storage within there, and then coupling that with software as well as the energy management systems. Number three, there is the opportunity to utilize or to provide the use for second life batteries. So again, there's rapid growth in East Africa and across Africa of the electric vehicle. But what does that mean? In about say 5 to 8 years from today, we're going to start seeing batteries that are no longer fit for e-mobility, but then they are they're also too new to throw away, if you get what I mean. They're too new to be discarded, but then they are no longer fit enough to handle the demands of e-mobility. So that is where giving these batteries a second life comes in. So there is the opportunity then to take the batteries that are no longer fit for purpose for e-mobility, utilizing those to set up an energy storage system, and then the cycle continues, that energy storage system coming in to charge the other vehicles as well. There is also the opportunity for us to develop local technical capability. So in terms of design of these energy storage systems, diagnostics, servicing of the batteries, energy optimization, coming up with models of how can we make the most out of these energy storage systems. And I'll combine that with the last point where we need to be able to standardize and have certifications for these systems. Again, the energy storage systems are still being built in silos. So as, for example, here in Kenya, I'm aware of just two companies that have tried to take, say, the second life batteries and begin to convert them to support into storage to support one home use on scale, like on a commercial or industrial basis. And one is also coming in to support smaller EV charging at a lower scale. But all this is happening in silos. There is no standards that are being followed. There's no standards that have been rolled out. There's no specific certification that has been gotten. So in order to be able to do this at scale, it's going to be important that there is also guidance on what the standards should look like, what the certification should look like, so that the safety aspect is kept, even as different companies are being innovative about this. The fifth opportunity lies in financing, and the previous speakers also touched on this a bit, where we are able to provide energy as a service, but then also charging as a service to again bring down to lower the barriers to the adoption of the electric vehicle. There's also an opportunity to use energy for range extension. Now this is on the vehicles. We've seen a few, I would say, innovative souls go out and try to put, say, solar charging on their buses. We have received requests from different people to install solar on their buses and their trucks. For the record, we've not yet done that, but it's something that we are looking to do. However, there's an opportunity now to turn that into range extension for the electric vehicles. So, for example, if a vehicle has been, if its original battery has been designed to travel, say, 300 kilometers, with adding the solar system, it is possible to extend that range to maybe 350 kilometers. That's what I mean by range extension. And finally, there's also the opportunity where EVs are no longer just drawing power from the grid, but then through the EVs and the energy storage systems, they are being looked at as energy assets that can now do what we call V2X. So it can be providing energy from the vehicle to buildings, from one vehicle to another, from the vehicle back to the grid, so that it's contributing now to the energy generation rather than just looking at energy utilization. So overall, this is a quick wrap up of where we would stand with integrating energy storage system into e-mobility. Again, I would say it's not yet been done at scale, but it is possible. And all this that I've laid out really is where the opportunity lies for us. Good to see that I'm in time. Thank you. And I'm looking forward to the questions or anyone who is ready to share an opportunity of what they have been able to do.
There are questions and opportunity actually being asked in the Q&A, and I'm very pleased to jump to opportunity before going to question. Again, Rachel just said a very good presentation. She's asking, do you partner with EV charging provider outside of Nairobi? I say the outskirts like Ngong and Kiambu. Probably those are regions in Kenya that I'm not familiar with.
Yeah, those are regions within Nairobi. Thank you, Rachel. Yes, we've set up charging stations within Nairobi. We have 11 locations now, and because we are very focused on providing this for the electric buses, in as much as we have opened up to the public. In Ngong, the closest charging station that we have on that side is going to be in Ruruta, one in Kikuyu, and then the other is going to be in Kangemi as well. I think those are the closest that I can think of on that side. But to answer your question, do we partner? Yes, we do partner. And as Basigo, we are proud to declare that right now we are launching more charging stations in partnership with some of the oil marketing companies. So as we speak today, we have set up charging stations at Total petrol stations, at Ruby's stations, as well as Vivo Energy stations. So again, we do not look at them as competition. It's really an opportunity for us to collaborate to be able to access more charging for these other, for more of the public, first for our buses, but then opening up to the public as well.
All right, you just anticipated my personal question, but we'll keep it for the last. And I'm taking a question from Benjamin Clark, who is actually our Director of Operation. He was also listening to your presentation, and he asked, is it a case of build it and they will come, or are you looking for an acre demand for charging station before they come? And as a follow-up, is this not a significant additional cost to the fleet owner?
Wonderful. Thank you very much for that question. So I will say as Basigo, we go ahead and address 4 key aspects in our rollout. Number 1, we provide the design of the bus. So the bus or the electric vehicle, because we're also now growing our platform from just buses. We have already diversified into electric vans, and soon we shall announce what our next electric vehicle platform is going to be. So yes, we provide the full specification of this vehicle, because again, I like giving the example of Rwanda because it's a bit obvious. Before we started out in Rwanda, or even when we were trying to roll out there was always a question of, are you sure that your electric buses will be able to go up these hills? I don't know, Salim, if you've had that myth as well, where people think that, the electric vehicle, it's too fragile, it won't be able to go up the hills, or it will reach the hill and it can't, summit it. However, the expertise that we carry as Basigo is we're able to design these vehicles in a way that they are localized for that terrain, localized for that market. So for example, the electric buses that we have in Kenya, they are very different from what we have in Rwanda, because we go into the market, understand what are the needs, what are the technical needs, what are the commercial needs, and then design the vehicle to be able to fit those specific needs. So yes, that's one expertise that we bring as Basigo. Number 2 is we provide the charging infrastructure for these vehicles. So we take that burden away from the owner or the operator of these buses. They no longer have to think about about, oh, when I buy the electric bus, then I have to think about charging. No, that is something that we as Basigo come in to do. And through that, because we are providing charging for our fleet, then on our end, when we are saying on a per bus basis, it's not as expensive as you who would set up just charging only for your unit. I hope that makes sense. The other thing that we provide as Basigo is service and maintenance for these vehicles. So we have set up service centers because we also understand it's new technology. We don't want you to buy, say, a bus from us, and then you're worried, oh, what happens when the battery fails? Where do I go to? Because again, service of EVs is still an emerging aspect within on the continent. So Basigo, we went ahead of you and said, okay, we will invest in service centers, in all the equipment that's needed to diagnose and service these vehicles. So Basigo bears that entire burden. We take that burden away from the bus operator or from whoever is buying the vehicle from us, and we invest in a team. We invest in mechanics and technicians. We invest in service centers. We also keep stock of spare parts that are required to service these vehicles. And finally, to answer your question, we also look at the financing of these vehicles. So our biggest innovation as Basigo is what we call pay as you drive, innovating finance, where we then bill the client or the operator based on every kilometer that they drive. And this is coming from the fact that because batteries are still quite expensive, that makes the electric vehicle generally expensive. On average, compared to when you think about all the vehicle segments, be it the two-wheelers, three-wheelers, passenger vehicles, trucks, buses, if you compare an electric version to a traditional fuel version, the EV is going to be about 1.8 to 3 times the cost of the traditional vehicle. So, and we realize that that is one of the things that is hindering the adoption of the electric bus, specifically in our case, electric bus, electric van, electric truck. So what we then come in and do is provide that pay-as-you-drive financing, where we request you to just pay a small deposit, as what we call security deposit for that bus, and then you pay the balance for operating this vehicle based on every kilometer that you drive. So to answer your question, is it a case of build and they will come? So in our case, we handle it all together. So we set up the charging infrastructure as we roll out the vehicles, the buses, because we know that they will need them. So we do not, so setting up the charging infrastructure just enables us be able to separate, rather to serve more bus routes, more clients, and provide convenience to these drivers and to the operators. So for us, they go hand in hand. As we roll out vehicles, we are setting up charging at the same time.
All right, so very, very insightful your feedback, and I'm going to just close this session by coming back to 2 elements. We had question in terms of infrastructure, in terms of policy that has to be set in place. But again, you also ask if there are regulators in this discussion. Yes, we have tomorrow, we will have one session with a grid operator. And on Friday, we will have another session with a regulatory institution. Coming back to the grid operator, we will have the managing director of the grid operator here in Rwanda, who will be also presenting about some element that you just mentioned. And since you also mentioned Rwanda, yes, we will have the grid operator EUCL of Rwanda also join the discussion tomorrow for a panel discussion. Yes, so thank you very much, Doreen, for this intervention. I'm going now to take our last speaker of the day. So you can just turn off your mic and your camera. And I'm going to welcome...
Thank you so much for having me.
You're welcome, Doreen. And I'm going to welcome Norbert Ombese from Cross Boundary. He's the engineering manager at Cross Boundary Energy. And Norbert is going to present about an amazing case study that Cross Boundary just invested in DRC. Norbert, I'm very happy to hand over to you the presentation. Thank you.
Thank you so much, Salim, and good Good morning, everyone. Thank you for the opportunity and the wonderful presentations that came after me. So I am Norbert. I'm an engineering manager at Cross Boundary Energy. Basically, what we do at Cross Boundary Energy is we invest, finance, build, and operate renewable energy assets across Africa and Australia. And on this particular session today, I'm going to take you through a bit of a landmark project that we've done, which I do feel is a big step in our industry in terms of achieving baseload for the renewables. And this is particularly in a frontier market, and the country is DRC. So hopefully, oh, sorry, I haven't shared my slides yet. Let me do that. Thanks for the reminder. Okay. Just let me know once you see my screen.
You can perfectly see your screen and you can put it in presentation mode.
Okay. All right. Can you see now?
Yes, we can see. We can see the screen, but we cannot hear you anymore.
You may have lost me there. Just give me a moment.
And if you want me, I can also help by sharing it directly on my side.
Yes, please.
Okay.
I think that will be better because it seems like I'm struggling from my end.
We got you. Are you seeing my screen?
I think it's loading. It should be here. Yes, I can.
Okay, perfect. So you will just direct me to move in the next slide.
Okay, sure. Yeah, definitely. You can move to the second slide. Yes, Salim, we can move to the second slide. So basically, it covers what I'm going to present today. How we designed the project, what the basis of the design, how we deployed it, some of the challenges we faced, and of course, CBE's practical guide to deploying BESS in Africa. Next slide, please. Thank you. Yeah, so I think from previous presentations from yesterday and even today, we've really seen how the renewables are slowly getting more and more deployed in Africa, and this is due to the prices. And of course, looking at this particular project, when you look at the copper belt, there is a structural deficit in energy, and most of the mines are running on diesel gensets, and this is causing quite a lot. And looking at the geopolitics that we're currently facing with the Strait of Hormuz closed and all that, the fuel prices are up. Definitely, that is going to affect not only the price of the product, but also the operations. In addition to that, the renewable energy costs are also falling, and particularly for PV. And I think from a presentation yesterday as well, what I captured is the prices have come down to around 87%. And this, of course, makes a base load configuration. Thirdly, base load configurations are kind of reducing the exposure to the fuel prices, like we're currently seeing again, the geopolitics. Sorry, I'll be using a lot of the Strait of Hormuz effects that we're feeling now. So this is part of the reasons why we're doing this. And lastly, energy as a service is one of the big selling points for us in this baseload business, because we do let the mine now focus on their main business, which is the mining, and then leave the other aspect of the renewable generation and the energy transmission to us. So next slide, please, Sam. And maybe just to add on to that, one of our missions as cross-boundary energy is to decarbonize mines. That is why most of our clients are mining clients. Now, specifically to the our client is based in Kolwezi, and the power demand is projected to be around 240 megawatts by 2026. And DRC being a frontier market, of course, we do understand the challenges that come with grid instability. And this is, I think, one of the problems we are solving for not only within the DRC, but within Africa. And in addition to that, the requirements from the mine in terms of having a reliable and uninterrupted power means that whatever solution that we were designing for needed to meet these criteria. Also, currently, the mine, as I told you earlier, runs on gensets that run on diesel fuel. And looking at the cost, it's quite costly. And this dependency on fuel and the volatility we are seeing with the prices is definitely creating significant operational costs and exposure, and of course, supply chain risks as well. So for our solution, what the mine required for a first, so this is being done in phases. So for a first phase, it was to deliver 30 megawatt baseload that is uninterrupted and dispatched to the substation within the mine itself. And this, of course, meant for the first time in Africa, we were going to be producing or providing baseload energy from renewables. We know the intermittency that comes with solar, and of course, the advantages that are now being provided with reduced prices of BESS. And then, of course, as from the financials, we're looking at a pay, take or pay structure, which comes in the PPA. And this offering includes the financing of the project. We own the asset and we operate the asset over the lifetime of the PPA. In return, of course, the mine is going to be making a lot of CO2 offsets, and which are estimated to be around 78,000 tons annually. On to the next slide, Salim. Now let's look at what exactly we provided for in this particular project. So these, so for the basis of design, basically, so what we are looking at or what the requirements were from the client, and I think I've just covered them, but I'd be happy to run through again. It was, of course, 30 megawatt uninterrupted power, which means that we don't expect to have any losses at any particular time. This required that we do design a system that is quite redundant. In addition to that, again, renewables and the variability, the seasonal variabilities means that we needed to factor in, especially looking at the climate in the DRC, where we do have a 6-month rain season, and then we do have a 6-month drought season. So we needed to factor these, especially during the rainy season when the irradiance is really low. In addition to that, we are looking at the logistics to site. First of all, we don't really have an operational port within the DRC. Therefore, we either needed to bring in our components through Dar es Salaam or through Durban. That means long overhaul transport. In addition to that, we do have weight limits on the roads. Looking at even from the presentations that were here yesterday from the OEMs themselves, the kind of offerings they are providing for utility scale projects, we are looking at containers that are around 40 tons, 35 tons for you to reach between 4 megawatt hour to 5 megawatt hour solutions. And looking at the restrictions on the roads currently, the maximum that you're allowed to transport is about 30 metric tons, especially on the roads that you are using from South Africa up all the way to the DRC. And that meant that now we needed to tweak our designs a bit. And the modularity, of course, came in the end when it comes to the redundancy, where, for example, during the planned and unplanned maintenance, we did have the system designed to be able to provide that redundancy and still offer the 30 megawatt base load. On to the next one, Salim. Now, looking at our project, we are looking at a 234 megawatt peak solar combined with a 123 megawatt, 526 megawatt hour BESS. And this includes 180 20-feet containers, each rated at about 2.9 megawatt hour, and 90 PCS units. Of course, in addition to that, we do have 23 6 MVA transformers and 6 RMUs that feed into the e-house that we see at the top right of the presentation, which of course collects both, which has 8 feeders from the solar plant and 7 feeders from the BESS plant. And then these feeds now in with 2 incomers. Again, in addition to that, we've also FP batteries, and degradation is a factor. And looking at, again, the needs of the project, which is maintaining that 30 megawatt baseload supply, meant that for us to cushion ourselves against degradation meant that we do have an augmentation schedule after every 2 years where we ramp up the capacity. For the first year, it will be around 35 megawatt hour. And then as we go on in year 4, year 8, year 10, we are looking at 20 megawatt hour. Next slide, please. So just taking you back a bit from an execution perspective. So when we signed the PPA, we were required to deliver this project within 12 months. Ideally, most of the time, if you're doing a solar-only project, then that is very feasible. But when you're doing a solar plus BESS project, then that timeline is quite tight. And then considering that this is a frontier market, that makes the execution to be even more complex. So we did sign the PPA in April last year. And at the same time, we had all the work streams running in parallel. So for the design and engineering, we were able to start a bit earlier in March when we had the notice to proceed. And between March and May, we were able to do the high-level engineering. We were able to get the suppliers, sign the design and supply agreements, and get procurement running into place. In addition to that, as soon as the design and engineering phase was completed, we were also running multiple work streams in terms of manufacturing and the construction kicking off. taking note of the fact that we did have the rainy season starting in September. So that means all your civil works need to begin early before that, or otherwise you are in deep trouble. So some of those work streams, of course, we had early site studies, early works coming in place early enough, the network designs and all that being fast-tracked, as well as being done in parallel. But then, of course, some of the design inputs required some of those studies to be done, like the geotechnical studies, the topography. All those go into the designs of the piles, the designs of the foundations. So, but we were able to run these systems in multiple work streams. And then also we did build an in-house full supply chain and logistics team that was able to handle the shipment and the logistics, which of course came in phases as well. So the project was done in a phased approach, and in the process as well, we were able to achieve some of the delivery targets in there. In terms of commissioning and testings, we are currently, of course, in the process of commissioning. In as much as we had that tight timeline of delivering within 12 months, of course, there are a few challenges that came here and there that required that some of that timeline pushed forward a bit. But then currently, as we are speaking, we've definitely been able to energize the e-house. We've been able to finish the hot commissioning of most of the battery containers. The EMS has already been commissioned. We've started functional tests on most of the battery containers. And of course, we are still targeting a COD of July to August, but then that is still dependent on the reliability testing and all that. On to the next slide, Salim. Yeah, so like any other project, and especially in the DRC, of course, we did have various project risks. And in particular, these are some risks that we really flagged early and tried to mitigate as much as we could. But of course, some were not that straightforward. For example, looking at the road infrastructure, of course, we do have context of the African market and the kind of road infrastructure, as well as the port and site logistics as well. So a lot of transit towers on the road, which created a lot of transit uncertainty. I spoke to the weight restrictions, moving through different jurisdictions, which meant some delays in clearance and all that. In addition to that, getting the best containers on site in batches meant that we had to prepare early enough to supply the auxiliary power to these containers, because of course, most OEMs give around a 90 to 150 timeline from shipment at the factory all the way to when you're supposed to energize this, because you need the HVACs working, you need the batteries to start charging and all that. So any slight delay in that will also affect, has effects on the warranty and all that stuff. So we did have the temporary auxiliary power systems in place, but still that was one of the project risks that we saw in there. In addition to that, the regulatory frameworks, navigating tax and regulatory frameworks was also one of the risks that we flagged and needed a lot of coordination with the local authorities. We did have some expert teams that were based in the DRC full-time that were able to maintain and give ownership to those work streams. And finally, of course, a project of this scale involves a lot of interfaces. So you have the best EPC, you have the MV stations, and the whole network. And all these interfacing requires careful prioritization of tasks and critical path alignment. And these are some of the risks that and challenges that we've been working across on this project. On to the next one. Yeah, so on to my final discussion in terms of how CBE looks at the frontier market and some of the points that we can provide, especially in regards to deploying utility scale based projects in Africa. I've spoken to the interface management aspect, looking at the various parties that are working within the scope. So we should be able to formalize all these interfaces before any design or any work commences. Having those kickoff meetings is very necessary. Having responsibility matrices in places, being able to remove any ambiguity in any of the processes that are in there early enough, I think is one of the good ways of overcoming the risks that we saw in there. In terms of the life cycle design, first of all, we had to over-design, especially from a PV perspective for this project, because we factored in all those variabilities from the seasons. So looking at that and looking at the degradation of these batteries, these are some of the things that need to be factored in early on as you do the project financing phase of the project, so that you are easily able to get the dividends throughout the project life cycle. In terms of regulatory alignment, again, frontier markets, in the DRC, for instance, this was one of the first solar projects at utility scale done over there. So this meant that we needed to unpack a lot of some of these workflows. And in addition to that, of course, things like tax exemptions, import approvals, there are licenses that are directly linked to this, but unfortunately, there are some delays that here and there. So that alignment is really important, and having people, especially on the ground, to push this is one of the ways to mitigate that risk. In terms of commissioning planning, again, goes hand in hand with the interface management because of the various stakeholders on the project. So a unified commissioning plan should be agreed on by all parties, and these should definitely be non-negotiable so that you don't have any interface friction towards the later stages of the project. In terms of infrastructure and logistics, again, we are in Africa. Definitely that is something, in as much as we're still seeing improvements in infrastructure, having projects in these remote areas, because most of the mines are really in remote areas, you're going to face the road limitations, the bridge loading, because there are some of these bridges that may not be able to handle 30 metric tons, 40 metric tons. So doing a road survey and all that is very important. Custom hold points, sometimes you would find that maybe there are strikes at the border points, long queues, in as much as these are factored in, of course, in the schedule, but sometimes they could go beyond the contingency planned. So it is important to plan for this early enough. And finally, on the integration, especially on the system performance, it's important to carry out these reliability tests. Of course, there are the tests that come with the OEM and all that, and also some of these are contractually are kept in the contract because of, for example, the warranty implications and all that. But we still recommend that some of these discussions with the OEMs are had. And in addition to that, we would also recommend that we do have service level agreements at scale. Yeah. So in conclusion, I would say that this is a project that definitely opens it up for us as as players in the renewable energy industry. What this project basically proves is that the technology works, the challenges or the economics work. I think we've had a lot from financing from the different presenters who've come on to the call. But then it is the execution bit that we now really need to take more interest or more focus on. And CBE has already shown that it's possible to do a baseload project with renewables, and hopefully looking forward to many more. Thank you so much for your time.
Thank you very much, Norbert, for this amazing presentation. Let me just stop sharing my screen and turn on my camera so that I can properly read questions. Okay, and I will pick the first question. The person did not mention the name. He's asking question to cross-border representative. Does this timeline refer to any specific project deliverable? What apparently did not get the project here. I'm taking because it's asking if it's the timeline that you just showed is relative to this project, but obviously it's relative to the project. Unless I did not get it well, Norbert.
Yeah, of course, the timeline is related to the project. Yeah, of course. Maybe just to add some bit more context there is definitely because the mines are running on generators most of the time because of the instability of the grid, or sometimes some of them, of course, grid connected. Any little disruption to that translates to $1 million loss. So the faster you execute the project, the better for both the mine as well as for you.
All right. Because we just talked about, yes, the OEM deliver the technology and the fact that we have the project, it means that the technology works. But you also mentioned about execution. So coming back to it, there is one very interesting question that has been repeated many times. It's all about what were the key technical and financial challenges encountered during the development of this project? Because I'm pretty sure that's due to the capacity and innovation in this project, you must have faced serious challenges.
Yeah, 100%. Just from a technical perspective, again, I said in terms of sizing the battery containers, most of the offerings in the market are way above the limits, the road limits or the tonnage of this project. And also looking at the redundancies, especially being a baseload project means that we need to give that assurance that we are going to supply constant power. So this means from a redundancy perspective, your design needs to be modular. So that is one of the key aspects in the project: redundancy, modularity. Third thing is also about the design requirements in place, or the design requirements from a regulatory perspective. For instance, a previous, I think yesterday, one of the presenters talked about fire being one of the major risks that we face from batteries. So in this design as well, that is one of the things we're looking at. What do the NFPA regulations look at? All that. So from a technical perspective, that is what I would pick out from. From my finance perspective, I wouldn't say much because we are financing the project ourselves. So it is something we model as we develop the project. The only risks there may come in from the tax exemptions and the fact that maybe that may take a bit of time because of the regulatory challenges in place. So that's one of the areas that would drag a bit longer.
All right. And a question from Dri Kluskens is asking, have you looked into including LDES, long duration energy storage solution, next to the LPF battery system to make the overall LCOE lower?
Yeah, definitely. It's not something we explored yet, but I would be happy to pick this up just to understand from the financials how this would look like. Definitely any innovation or any new technology that is coming into the industry is really welcome to refine the solution that we're currently putting out there. So definitely if the financials make sense, 100% would be good to include that in that solution as well.
All right. And
I
the
don't know if
next
I've
question,
answered the
the
answers.
next question from Florent. Florent is asking, does your EMS manages all the assets producing, storing electricity for the mine need, including gensets, for example, or only your assets PV plus base? Yeah.
Yeah, no, I understand. So in terms of the EMS controls only our side of the project. The battery limit is at the e-house or at the collector substation from the customer side. So the customers' generators have their own control philosophy on the other side. So the EMS is strictly responsible for the battery and for the battery plant, the base plant, and the solar plant up to the
All right.
e-house. Yeah. So it
Just
basically
last
manages the
question.
dispatch.
Just last question, if you can allow me also to ask. So this is really coming from me because I was really looking forward to your presentation. Since I've really been in touch with different OEM expressing us interest to help them get into the DRC market. But here it was, please connect us with mining company. So coming back to my question, it was based on the lesson you learned from the Kamoa project. What opportunity do you see for replicating similar large-scale energy solution for CNI across Africa? And I also wanted to understand what is the particularity of Kamoa, because I know DRC is a country with many mining company. So is there any particularity for Kamoa that motivated you to venture into?
Yeah, no, 100%. In how we engage in the market, of course, we do look at the credit worthiness of the partner that you're going to work with, because at the end of the day, we own the asset. So if we build an asset at that scale and not able to evacuate that power, that means that jeopardy. So we should be able to, for example, whoever we partner with should be able to show a track record of being able to take up the power that we are selling over the length of the PPA. Your question, of course, the due diligence we do as a company before we get into such a long-term partnership, and that brought us to our partnership with our client currently. But then in terms of more opportunities, yeah, of course, looking at how the market is structured currently and the copper belt, more and more clients are really sending out RFPs for similar solutions within even Kolwezi and the Lualaba province itself. So it is something I do feel like we are going to see more and more being offered in the market. Yeah.
All right, thank you very much, Norbert, for your presentation and also for all the amazing feedback. We are going to end today's session by here. And also, I would like to thank all the speakers who dedicated their time and their energy to avail themselves and deliver all the amazing presentation. And also, I would like to thank all the attendees because we couldn't also make this event without you. So just to share an overview of what we've discussed today, those were the lineup of speaker, and I'm inviting you again tomorrow to join us for a very hot topic because it will be more of a panel discussion between different stakeholders. And I think it will be also interesting and get everybody to join tomorrow's session as well. And also we will have our last session on Friday. This is said, once again, thank you everyone. Thanks to our partner as well. See you tomorrow.